want to thank everyone today for coming. Today we're going to be discussing with our panel basically how do businesses, startups, and existing businesses raise capital for expansion or startup. What steps they can take to put themselves in a better position. Today we have representatives here at National Savings Bank and Asheville Mortgage who are going to introduce themselves and talk about this topic. So if everybody could pay attention to the panel, let's have one discussion afterwards. We will have a question and answer session, so please save your questions. You would turn your cell phones on to vibrate when you're recording, and we'll get started. And Andy, we're going to start with you. You can each introduce yourselves real quick. Okay, thank you.
Hello. A correction. I work for Proficient Mortgage. Proficient Mortgage does the residential loans. Everest Commercial Lending does the commercial loans. So today I'm Everest Commercial Lending. Let me ask you a question. Can you all hear me okay?
Yes.
How many people think that money is available for businesses and commercial property? How many people think that money is available for for businesses or commercial lending?
I think it might be.
So a lot of people don't think so. You know, let me, it actually is. And to clarify that, it's very much like what's happened to the residential market over the last 5 years, is that lenders are making prudent loans, and not just if you walk in and breathe, you get money. The difference is when you look at a business prospect, I'm going to use a bed and breakfast as an indicator, as a business talk about. I happen to own one, so I can talk a little bit about it. If you're selling your bed and breakfast, you have a value of the building and the value of the business, and the business earns money. I looked at one very recently. They had 7 rooms, and they grossed $120,000 a year. I said, that's great. Well, you take out all their expenses, and the net money to debt service only would support $723,000. They wanted 1.4. What's happened is, over the years, is because everybody's business is suffering, you're making less money. So there's not as much income, so the business is worth less. So so when you go into a lender, whether it be National Savings Bank or the secondary market, which is what I do, you look at how much money is left to support the debt that you're looking to take. And if you have a $2,000 a month debt service, the bank wants 1.3% or 1.3% debt service coverage ratio. So if you have $1,000 payment, you need to have $1,300 in income to qualify for that, regardless of what you have personally. And if you're buying a business that has been around for 30 years and it's slowly diminished in value, if you say, well, I'm going to come in, I'm going to rescue this business, it doesn't support it. And the question is, and then how long are you going to go without an income to carry this business and work 60 hours a week and try to make it successful? And these are all the questions that lenders ask now that they never really used to ask to that extent. I have 2 questionnaire forms right here. One's for commercial real estate. If you have like a strip center or something to that effect. The general questions: what kind of property is it? The purchase and refinance. What is the surrounding market? Is it an increasing area, declining area? What is the current vacancy right now? What is the historical vacancy? And we also think, is there sufficient money in the account, in the cash flow, for the owner to make any money? Because they realize if the owner's not making any money, he's going to walk. He can't afford to do that. Okay. I have two different lists of information and questions that you choose to present to a lender. I'm not going to go on forever with this, but and this is one thing that's very important is analyzing the profit and loss statement for a business that you're looking to buy or go into. We do money for startup businesses, and then I got an executive summary for a business that was 83 pages. They analyzed 3 different competing businesses, the whole area, what was available in the marketplace, the competition. It was incredible. And when I presented it to my underwriters, they were like, "What's that?" Because it was so incredibly thorough. And we got the deal done. So, like I'm saying, we're asking questions now that have not been asked, but lenders, we're dying to make loans. We're just looking to make good quality loans that we haven't seen yet. I'll pass that along, and then we'll come back and open up the questions.
I'm Louise Baker, and I am the manager and business lender for 2 offices at National Savings Bank, one in the Chicago location in South Asheville, and the other one in Reynolds, out in the Fairview area. I've been with the bank for about 11 years. I like to think of myself more of a connector. I know some of you in the room, and I do many other things in the community. I've been involved in nonprofits and music presentation, and I like to find people's needs and what connections that they need. And big joy that I have is to go out and meet business owners and find out about the business and what their needs are, and then match up the product that we're helping. We are a local bank. How many of you have ever heard that? Oh, that's good. We've been here 76 years, and we are headquarters opening downtown. There's our downtown there, 36 people committed. Our niche really is the small business owner, or professional, entrepreneur, local business. And in our offices, we can meet with people to look at their financing needs, anywhere up to about $250,000 in request, and that can be for capital, for startups, for lines of credit, purchasing equipment, or mortgage. I did bring with me a list of the documents that we like to see the applicant bring, and I've brought a whole bunch if anybody likes to take them. Kind of helps us to know what type of finances we'd like to see. And we have someone who did the pre-tax finance process is much smoother than the first year. Really, with us, it's not much of a minimum. We need to do a loan for $5,000 by a copy. But we do look at startups and purchases of existing businesses, but we're also looking for experience in the field and about a 20% equity. Really difficult if someone has a great idea what they want to do and has no capital in their own, whether it's equity or taking home mortgage or savings or money that's been given to them by relatives. The fact is that they have to get so we do look at all of that, and it's really important that before you come and speak to anyone financing, you've thought about what you really do. Some people will come in and say, I think I need $100,000 line of credit. And in reality, they need capital or term loans to buy the uplift of the new state they're going into that they buy from rates. And then maybe a smaller line of credit. The line of credit is just going to be for that seasonal need, or when it comes to cash flow issues, we try to help them figure out what they're doing. Definitely like to visit with any of the companies who do questions and just the things to hand out. And Jared talked out a little bit about what we look for in terms of
Thank you. I'm Jared Perkins, obviously with Asheville Savings Bank. I manage the downtown office. I've been there for about 4.5 years now. Worked for other large banks that I won't name before that were absolutely not local. A business plan is one of the main things we're going to look for with a startup, or even with still a fairly new business that may have been around for 2 years. I know a lot of people feel like doing business plans, they got to mountain BizWorks, they go through that. A lot of times people feel like, it's just something they want to see, but, they don't ever read. And we spend a lot of time on these business plans. We want to see that, not only can you put together something professional like this work, but you have really thought through all the scenarios that you may run into. And, you've looked at your competition, you've examined your business from the inside out, you've made projections that are reasonable and conservative. And, I've gotten a business plan before that was one piece of notebook paper and written in pencil. I didn't do that.
Those are the best ones.
You may not believe it, but I did not do that one. But we can business plans that are well thought out, and when we take those to our bosses to get these approved, that's one of the first things they look at. And they're very impressed, like, wow, this person has thought through all these scenarios. They know what their competition, they know challenges they may face, they know they have cash reserves. They know they're not going to open the doors from day one and have a line of people waiting. A lot of people have a great idea, a great concept for business, and they think that's what's going to happen. And unfortunately, rarely does it pan out. So I think you all could probably benefit. There is a wide range of businesses here. I think you're going to get a lot of benefit from questions and answers today, because we could lay out a lot of blanket statements that aren't going to apply to a lot of people. I don't want anyone to feel like they didn't get all the information they wanted here today. But I will say one thing about our bank, and a little bit of how it differs from maybe some larger ones, is we talk about the line of credit versus a term loan, and which one's appropriate. Well, we don't offer just one line of credit or one term loan. Because people say, what kind of loan can you give me? And we're going to look at your business and make a loan specifically for your business. What kind of repayment schedule is going to work for you? Interest, we do principal and interest, repayments, what kind of term. And so we really structure it like that. It's not pick a box, A, B, or C, and that's which loan you're going to get. And that actually surprises a lot of people because they think you're going to be very limited for the offer. So it's really up to you. I like to ask people, what terms would you like on the loan? And when they usually tell me a 2% interest rate, and I have to kind of smile and nod, other than that, they usually give me some pretty good information, and we can really work different as opposed to what they want. So unless you all have anything, you may have something else right now, but then after that, maybe you can open up your questions.
I just got a couple of things real quick. Generally speaking, you're looking for products that are $250,000 or less. So I'll put that in that range. I do secondary market financing, which is really doesn't start until we get to $250,000 and up. It's hard to be competitive in price to go into the secondary market and fund certain projects unless they're big enough to support it. And what I do is I work with you to put together your package so when you present it to the underwriter, it has a favorable level, as opposed to, and y'all do the same thing internally to your own underwriter. And I think that's very important, is to work with your lender, your communication person, to put together a really acceptable package that shows your business the best it can be. All the things are included that you need to show. The whole cash flow analysis, projected profit and loss. Anyway, I'll just let it go there. And if y'all have any questions, open it up. Go for it. Let's do that.
Okay, my question is, probably for the simple one that we talk about a lot, I'm not sure how important is getting a loan? Do you have to have credit to get loans, or is it something that's optional for?
Well, what we do is we're going to look at personally and your business. We look at a global picture. Credit is important because a lot of times there's one or two owners of the businesses. So that's obviously going to be a big thing to see how you handle your payments. So credit, while I would say it's important, is definitely not the only thing we look at. It's a lot different than, say, a personal mortgage where, a lower credit score and you're done. Whereas we're going to look at the cash flow of the business, repayment history of the business with other loans they've had, and then we're going to bring your personal finances in as well as the business to get a global picture. He mentioned about a 1.3 ratio earlier that you would need to get that. Well, that's not just with the business. We're going to look at both because you may have a new business or the business had a bad year. Well, it's not fair when you have a lot of personal assets to just overlook those all together when it comes to a business. So we're going to bring all that together to look at it. Credit is a piece of it, but it is not the only piece.
To piggyback on what you said, I'm a brand new business owner. I'm organized. I've got most things in place. The next step is to get some funding, get the seed money, get things up and running, and moving in the direction I want to go. What would you suggest for somebody like me who needs some startup money to get things rolling in the right direction? What do I need to bring to the table to make it a little more attractive?
Well, I've got a good checklist for you. Now, you have another business that you've been going for a while, so we want to see a package of what is the success of that business. We're going to look at more as comparison to your personal credit history and whatever debt is personally, and then plan for this new vision that you have and these suggestions out there. So I think the business plan is key, and all of your current tax returns from your prior business and personal, even though you're changing steps, it gives us an idea of how you handled that before. So those are going to be the important things. So definitely the details about those two benefits. What's your experience? You've had experience working in that product line, and it will help us feel comfortable that you've got the knowledge and we didn't talk at all about collateral. There's all types of possibilities there too. Occasionally we do a totally unsecured loan. That's pretty rare these days. But it could be a piece of equipment. It could be anything in account, savings account, each other master we have. There's lots of things that you look at, and that's why we do the purchase.
Well, I was going to say that a little bit. A lot of times, it depends on what you're going to use the money for. If you want to use it for, to carry you while you get the cash flow, that's very difficult. So let's say you want to buy a piece of equipment. You have a hard asset there that you're buying. Lenders are more secure if they're putting their money into an asset as opposed to just startup money. You know what I'm saying? A lot of times you can get added equipment on a lease. I do equipment leases. So let's say you have a piece of equipment that costs $25,000, and you would show what that piece of equipment is going to do in revenue, and then compare it to the payment, and how long it's going to take to get to a certain level. And because there's a hard asset there, we could actually run a lease if we don't want to do a straight loan. And sometimes there's advantage of doing the lease, sometimes there's advantage of doing the loan. Okay, so a hard asset goes a long way. Second thing, and you touched on that, is that listen, just because you're a great cook does not mean you know how to run a restaurant. Okay? Probably the biggest factor I'm seeing right now is the experience level of the management. I have a deal bought today strictly because of the management they hired to run the operation. Because of their practice. So you have to look at any number of factors like this. In small business, that comes into factor too. Is, what is your track history? What have you done? In your current business, and you want to do this. Okay, how is that going to? How does what you do now relate to what you're doing? And what is the project or the proposed income stream from the new project? And how those can relate.
I have a business and I've had it for 8 years now. I've got 2 questions. And I know there's factors in rates, but if you were extending a loan for, let's say, business expansion, and again, factoring credit score, whatever, what would you say the best rate going is and the worst one?
Well,
It's based price.
I don't want to be curtail that. The best answer for that is market rate, and I'm saying that because it could be I've seen loans written at prime less than 1. Okay, I've seen the loans written at 18%. And it's going to depend on what the project is, your experience level, and the whole deal. The thing with commercial lending is absolutely every deal stands on its own.
Okay, so it's not like residential where you're
Nothing
told, it's right now at 4.25. Oh my God, what's it for? The commercial is factoring.
Roll the dice and see where it comes in. There's a risk associated with it, and that risk is related to it.
If you got an unsecured loan, we're going to offer a higher interest rate than if this is a real estate secured. Okay, but it's so it's going to vary. If it's a loan that we can barely make fit in our parameters, it's going to risk-based pricing. It's going to be a slightly higher rate than if it's just a slam dunk. Lots of collateral, lots of cash flow. Yeah, and so that's what most lenders do. It's going to be risk-based pricing. So we will rarely, if ever, put a rate up front. If someone walks and says, "Hey, this is a loan, what do you offer?" It's not like a mortgage where we can say, we're offering 3.75 with a little asterisk, meaning you have a 7.4 credit score.
Okay. So once you put your package together, it's a good idea to go to lots of lenders and see who's going to do that rate.
I would say yes, I would say that you could go, if you get your package together, a lender can get that done pretty quickly. So I would say go to the one you're most comfortable with, preferably a local one, and let them look at it, and then let them come back and see what they can do for you. It's not really advised to go to, like when you're shopping for a car or something, throw it out the window and go to private.
Okay. So the second part of the question is, one of the things that I learned when I opened the business is, I had an assumption that your business was your business and it had its debt and its income on that side. What I learned very quickly is everything that I did related to my business affected my personal side. So anytime I signed a lease agreement, that all went against on my personal debt. Is there a point in which if I continue to expand, obviously the business debt outweighs the income, but yet the business is really the one creating the income and paying debt. How do you separate those two? Or can you exclude them? That's essential right there. Make sure you categorize correctly so that whoever your client will be on the personal side and on the business side, so you show up in the right area. Sometimes everything you apply for, you're looking for my personal social security number. You're not asking, you're asking for the tax ID of the business. But y'all as lenders, you're asking for my personal information and you go after my personal credit score. That's right, because we look at it as just a global cash flow, global credit. And I totally understand the personal guarantee. The problem is if you don't weigh properly a person's income associated to the business debt. So the business creates its debt, it pays for its debt. But because I'm personally tied to it, now that debt flows to my personal side, and you look at what my income is as a ratio to that debt, and kill my credit score, and not y'all. But how do you can't separate it?
There is, okay, unfortunately, on small business, generally speaking, and most of us in this room feel the same way, or in the same boat, is, we're self-employed, and we are the business. Okay? Only at some point in the future, when your business grows up, you see, you have a business because now you have a job. Don't take this the wrong way. At some point, your business is going to grow where the business will function without you. And now you have a business and you have the right to oversee the business and go do something else. So at some point, as your business grows financially as well as the whole bit, you can get separate loans in the business. Okay. Most, I'm going to say probably 95% of all small business loans require separate loans. When we go in the secondary market, we have some non-recourse loans. They look at, that's why it's so big in my market, is the experience level of doing that business. That's what we're buying, is the experience level and not your personal statement. Okay, so that's for larger loans. When you get smaller loans, you are the business. Really cool. So when you get bigger, see, like you're a franchise. You're a franchise.
Yeah, tell me big. Are you referring to the businesses who are doing, like $500,000 in gross sales, $1 million in gross sales? What's bigger look like?
$1 million plus,
Okay.
at least.
Okay.
And that's minimum.
I'm on my way.
Okay.
Just piggyback that question, does whether or not the business is a sole proprietorship, partnership, corporation, have an effect on the ability to loan? No, not really.
No, it really doesn't. And just one other comment there, really depends on the institution and the type of loan. As to whether commercial loan many times is not as important to your credit bureau. Now, if the lender looks at your whole picture, they're going to see the business debt. But if you were to get a line of credit with a particular bank, it may not necessarily going to report that to the credit company. We for the most part do not. It shouldn't affect the credit score. If that's happening, wherever you're getting your lending now, it's going to be 59. That would not be a normal thing for the credit.
Oh, I didn't know that. Very much. Who's got another question?
Take it from this standpoint. The best way to answer the question is, you got a 20-year-old who just decided to go into business. You all know the odds are pretty good. You might as well not even go see them. That's just a question. When is that kid going to be able? You can start a business. Doesn't matter whether it's throwing newspapers, whatever. When is that kid going to get to a point as a young person when they can come to you and actually have a legitimate shot at getting funded? So it's an open question in that sense.
I'll go. It's pretty much like I said earlier. The lenders are looking at experience. Okay, a 20-year-old doesn't have any experience in much of anything. So just because he wants to go do his own business, there's no reason for him. Okay, at what point does he have enough experience to do it? A couple of years of history in that field is probably a good deal. Okay.
I think also the experience that you mentioned is really important. Yes, many people get call loan, get a credit card somewhere, because that's what the first thing they look for. You know, if they have experience, collateral, cash collect, and we'll take a look at it if they can have any credit history is required for us to.
Some of you sit on that last article. If you have a business that's been around for something that has a cash flow history, you've really never taken out any credit. As a business, pay for everything on the go. What are good ways for that business to start developing a business credit history and rating, if you will, to better position it to be successful in the world of the future?
There are things you can do, like a small overdraft line of credit with your local bank, where you apply for that, and it may be $1,000, but that is going to establish a credit history with that institution to show you use it responsibly. There's business credit cards that are going to have easier parameters normally to get, and you can then show, hey, we've got a $5,000 limit. Yeah, we've only been using 500 of that, and we pay it off every month. Things like that establish business credit. It's a little different than personal, but we're going to just look at it, from the most open-minded basis we can, and try to say, well, okay, they've been very conservative with how they've used it. Maybe they've only got a couple years experience. The cash flow is workable. Let's try this. So it's just a little bit of experience, just like knowing your market.
I guess how personalized do you get involved? I'm funded on my company and everything, and sponsors and all this stuff. But for a normal, like how many times do you feel like you're in Shark Tank? Like do people come to you and express and you love an idea but you can't do it because of the finances? How personal do banks and lenders really get involved, or is it all cold and straight and by the books? That's it.
That's a great question. I think you're very personalized, especially in this local community. We know the vast array of businesses and entrepreneurs and what we have here. We do have people come in all the time if they're treat adult with procedures on it. Quite often when people walk in unprepared, they're least likely to success, but try to get when you want to come out, see the business and see what we're doing, and listen to every time the request comes in. And that's why we all belong to the effort to do. We're here to meet people, because we are here for the time. We get a lot of requests. We probably out of people that walk into my office with a request, I can maybe do and the ones that I meet at events like this and out in the market, probably 50 to 70. And it's great.
And I'll just say, we can get very passionate about these loans. I've had loans that they've walked in, it's a startup, and they've got a great idea. And this is like, I would go to your business. I really believed in it. But then when you put it on paper, we have to be fair when we do this loan for other people too. And sometimes the numbers low. I think we went bankruptcy 2 years ago, and we haven't turned a profit in 4 years or whatever. But I love the idea, and that's a hard conversation because I'm personally invested in that, and I would love to see this succeed. But at some point, it has to work on paper, which is an idea. And that's all.
I think that's one of the big differences between a local bank and secondary market lender. The guys I work with, it's all about the numbers. If the numbers don't work, it doesn't work. Whereas they look at individuals a whole lot more than we do. So it depends on what your project is.
Because we're out there, meeting with them in their business. Looking at empty warehouses and getting the idea for what it could be.
They're not only looking at making you a loan. They want your checking account, your monthly service account, your line of credit. There's 5 or 6 different things that if they are willing to make you a loan, they want all of your business. And to
See, that's different. We don't care about that. We're not in that business. Whereas they can take on a loan, a questionable loan, because they're getting all of their business.
Yeah, we just really want to make a relationship. It's not a requirement that you bank with us, but you want to have that relationship. And you want to see what else you need. You need succession plans, you need 401k, financial institutions.
Okay, so I'm actually playing a little bit of devil's advocate for anything else. I've been through a lot of this over the years. But now you have a person who's aggressive, they're in business, they really want to accelerate the pace because they're thinking 2 years ahead. The business is kind of working, they don't have a loan, but it's working. Somehow it's working. And all of a sudden they go through a retail season, and all of a sudden they have $20,000 cash in their hands, and they're like, ooh. And they're not yet the smartest in how to spend their $20,000. But they do know one thing. I'm going to go over to you and say, look, I got $20,000. How do I make this turn into the ability? It gives the ability to maybe borrow in a year or two $100,000 or $200,000 versus taking this money, reinvesting it maybe the right way or the wrong way. How do I get you to take that money, not costing too much money, working with you? Like, I think you should answer that because I think a lot of people need to kind of understand there's many other variables to get to the end result.
Well, you could build credit with that institution just like you would personally. You could put that into a CD, do a small CD secured loan off of that, and just manage it, like I said, just manage it conservatively to show the basis of business credit right there. Or you could put it into your savings and not touch it and show like, wow, we've had this customer here for 4 years and their average balance went from $1,000 to $25,000. And it obviously shows you're keeping your money, you're not blowing it or mismanaging.
So these things really, they need your advice on it. So this isn't open market information for people. This is really creative banking. And we don't know what works or not works anymore. So that's why I asked the question.
So that is part of the relationship that they generate. The real difference is after savings bank is a very big relationship group. Okay, they can handle all of everything you just talked about. Okay,
And tell people up front.
absolutely. And see, as opposed to my guys are one-time big deals here and there. They're forever a relationship. Okay.
And I think that, Andy brought through the client profile, and he has the same thing. So what we want to do is meet you, not your business today, and say, well, what are you doing now? What do you want to do 2 years from now? You want to buy a new piece of equipment, you want to move out of your new space and buy a building. How can we help you get there? And we want to pre-plan and we'll take a small checking account, a small business now, and try to work that with each other.
Okay. Do you guys ever advise businesses on how they can, like, if you see a business that's struggling and you can kind of understand why from their financials, will you be willing to advise them on what they should do? And do you help businesses grow from that?
Yes. Yes. We do monitor with our existing customers. We're looking at what's going on with their checking account, what's going on with their loan. If they're having issues, we want to help you say, well, your checking account's going on, sometimes goes to house. Well, and buy all the products and stuff. Do a line of credit for you. Let's plan out. do. And, we do partner with our credit department and the CPAs that we work with. We try to keep learning and looking for those things that we can balance and say, maybe construction this in a different way, we do more successful down the road. We don't just close our eyes and say, that business is going under, hopefully don't lose your account. We're not at all, we don't go out there and do that.
I can't tell you how important it is for a small business owner to be very close to your place.
Good point there.
But I mean, because there are, money is our business. Okay, like I said before, just because you may know your business very well doesn't mean you know how to operate the business or run a certain company. Okay, but that's what we do all day. And by having a relationship with your vendor, will help you a lot.
I'm just going to refer you guys to softball. One answer from each person. Basically, why do people with this stuff? Why do you work? Keep the money local. Versus going to
We got to do softball.
softball question for those who are initiating some of the questions to make it very simple so we can
Being a local company, although we are a public private company now, our money stays here. It's important. If our clients have their money on deposit here, we are going to use that money for somebody to make it. Our funding, except for our mortgage lending that goes to the year long, all of our commercial consumer loans are to people in this market. We only are lending to local money. So, if you want to bank local businesses, it's that
And our charitable contributions here stay local as well. We're very active in a lot of charities, a lot of nonprofits in town. And by banking with us, the money stays here and it goes into the community to help other people.
And although all of my money that I place is secondary market like the mortgages, I am local. And we'll deals we do locally before we support local business. I mean, because sometimes you can't fund projects locally. I don't care, what it is. If the money's not available locally, it has to go to secondary. So, but the owners and the operators and the originators of the money are here and they support local.
Round of applause for our panel.